Welcome back to another exciting episode where today we are delving into the innovative intersection of real estate and blockchain technology. I'm thrilled to have with us today Michael Carpentier, the esteemed CEO of Vesta Equity. Vesta Equity is a company with a focus on tokenizing home equity. Now, the home equity market in the United States alone has amassed over $30 trillion of value, and globally it's over 50 trillion, some even estimate over $100 trillion in value in the global home equity market. So we're thrilled to have on Michael Carpentier of Vesta Equity to discuss the ins and outs of tokenizing home equity, tokenizing real-world assets, and where the crypto industry goes from here now that it's trying to unlock the value of these real-world assets. To put it into perspective, the crypto market currently sits at about $1.5 trillion. With projects like Vesta Equity, there's a possibility of unlocking tens of trillions of dollars of value on chain. This could revolutionize the crypto landscape as well as the real estate industry. Now, today we're set to explore an array of fascinating topics with Michael, including the tokenized home equity marketplace that Vesta Equity has pioneered, the exciting future developments at Vesta Equity, including income-generating tokenized real estate, and a broader look at the current state of the housing market, including trends in real estate prices and shortages. We'll also dive into the role of government in this evolving landscape, the potential of tokenizing real-world assets, and the significance of blockchain platforms like Algorand in this context. So be sure to share this video with a friend and sit back and enjoy as we explore these complex topics with an expert such as Michael Carpentier.
Ladies and gentlemen.
Michael, welcome back to the show. This is, it's been a long time coming. You were actually the first guest I had on my channel almost 2 years ago now, which is amazing to think about. And I was doing a little bit of research before this. And when we first spoke, the US home equity market was around $21 trillion in value. And it's now, last I checked, there was a reporting in September 2023 estimating it at about $30 trillion. Of course, the pandemic, we saw home values increase exponentially, which I'm sure helped increase the value of the home equity market. But, it seems like it's a really interesting time for a product like yours. So if we could just real quick, before we dive into, the overall market and, how things unfold or will unfold, can we just touch real quick on what Vesta Equity is for some of my new listeners that might not have been around for our first discussion?
Sure. Vesta Equity is a platform that enables homeowners to tokenize their home, access the equity in their home debt-free. And once they've gone through that process, it's a point-and-click environment, so it's very easy for someone to use. And that point-and-click environment includes everything from titling to home inspection to insurance, etc. And then once the property's been properly vetted, cleared, it's tokenized and placed on the platform. And our platform essentially is the Vesta Equity marketplace. And in that marketplace, investors can come and actually participate in the equity of that asset and participate in its future appreciation. We've also built in a bunch of features that include an equity premium or an equity dividend to increase the ROI for the investors as well. Essentially, at the end of the day, it's a debt-free way for homeowners to access the equity in their home. And it's a means by which investors can easily and seamlessly invest in real estate assets and build a portfolio of these real estate assets like they would a stock portfolio.
Yeah, it's fantastic. And I'm curious, how much in value has Vesta Equity been able to tokenize so far?
I think almost $31 million in homes on the platform right now. So our first thrust when we launched the product was to build up supply. It's a marketplace, and the question is always, where do you put your focus, supply or demand first? A little hard to get demand when you don't have anything, especially when you're dealing with investors. So we really focused on quality assets. And if you go onto the marketplace, you'll see we've got some phenomenal homes. Some are worth $3 million. Beautiful homes, they're vetted, they're inspected, the titles are clear. The homeowners are proud homeowners that simply want to either exit a mortgage or access the equity in their home. And it's a great opportunity for investors to jump into these assets and add them as part of their portfolio.
And how many different options does Vesta Equity have for both investors and homeowners that are looking to, tokenize the value in their equity? Is it just as simple as, tokenizing the equity and selling it to investors, or are there other types of products and packages that Vesta offers?
Well, specifically at the end of the day, it's about accessing the equity. If you're talking about specifically products like an equity plus an income on the property, that would be something that we're launching relatively soon, where we're going to tap into vacation homes primarily. We're going to launch a token, an equity token, cash equity token or dividend that will enable a vacation property owner to tap into the equity of their asset and sell it to investors. But with that, the expectation is going to be that they also are going to provide part of the income stream to the investors as well. And the reason why we're focusing on vacation properties first is simply for the very clear fact that they tend to appreciate in value better than leased properties. They're better built. They're also under the constant scrutiny of whatever platform they're involved in terms of reviews, is the property being maintained, and whatnot. Plus, they tend to produce a better income stream than your typical leased long-term property. So that would be an example of another product we're launching. But the crux of what we do offer is straightforward access. We're a marketplace to your equity and for investors to invest in that equity. We don't get involved in the property management of the property at all. We keep that and push that back to either the homeowner, just like if you've got a mortgage, you're responsible for your home. And even with an income property owner, you're still responsible for maintaining the property. And all that is reflected in how we're structuring out the cash disbursements at the end of the day. The investors have a no risk involvement in the property, meaning they don't have to incur any of the operational risks or any of the cost risk associated with managing the property. But at the same time, you want to be able to provide that homeowner or that property owner, that income property owner in this case, a means to which still to cover those costs and also make income off of it. So what we feel we've done is we've struck a really good balance, and we're going to be launching that product in 2024. We already have a bunch of Airbnbs lined up for it.
Yeah, that's really exciting. So if I have a clear understanding of it, the current structure are essentially tokens that appreciate in value, or hopefully appreciate in value. So it doesn't tie in any income that's produced by the property. Is that correct?
So on the income property side, the property would appreciate, which is part of the net gain for the investor. Plus, they'll receive a dividend payment on the income of the property.
And this is what you're rolling out in 2024.
Yeah,
right?
we'll be rolling out in 2024. Now,
Gotcha.
on the other end of the spectrum, if it's someone who just wants a normal homeowner and they just want to access the equity in their home, the investor gets two options to increase his yield. So he's not only getting the appreciation that occurs annually, he's also getting what we refer to as an equity dividend, which the homeowner can parse out over time and say, you're going to get additional equity every year for the next 10 years. Or the homeowner provides what we refer to as an equity premium. So upfront for the same price, he provides additional equity. What we're trying to do is ensure that our asset class is always above what you'd get typically in money market funds, and then approaching, the type of stocks that perform well annually, but are not the 30 to 40% per year appreciation, because with that comes a lot of risk.
Right.
We're really trying to find a nice middle ground. We're all about adding balance to your portfolio. And if you look at the portfolios of high net worth individuals, they always have real estate in the mix. And typically and traditionally, it's very hard for investors to access real estate. You can do it through a REIT. But then again, you're at the mercy of whoever's managing the REIT. There tends to be lack of transparency. You can get into mortgage-backed securities, which ironically are sort of the antithesis of what we do. They're pooled, they're backed with mortgages. They also are higher risk because there's no transparency. And we've seen in the past, there's been, just absolute disasters. And my concern is now their next looming disaster in real estate is on the commercial side with these mortgage-backed securities. Could happen again. Not on a scale potentially of what happened in 2008, but could still be a serious blow
Right.
to many banks and many businesses out there if that happens. Or you can also get into, real estate ETFs and other things like that. No one really provides a means for people to easily access these residential real estate assets because they're just out there, right? They're completely dispersed. Short of going into a neighborhood and knocking on people's doors and saying, "Hey, can I invest $5,000 in your house?" You may get a cop showing up if you do
Right.
that.
Right.
But there's no means for people to easily do that. And there is a significant amount of assets out there. And if you let's just take a look at a demographic of 55 plus. They're nearing retirement. We all know the vast majority of people have the bulk of their wealth in their home. They're nearing retirement. They have a pension fund, but they don't have much else, right? They don't have a stock portfolio. It's a myth that people think everyone has these outrageously large stock portfolios. A very small percentage of the population actually has stock portfolios. So these people are going to need to access the wealth in their home to either make up expenses they're missing on a monthly basis, or they're going to need it to do something. If you're 55 or 65, life's not over. You may want to do things. You may want to give money to your kids. You may want to help your kids. You may want to start a second career. You may want to start a second business. Where's that wealth? It's in your home. Short of going to a bank and going back into debt, and who wants to do that when you're 55 or 65? Right. This is really the only way to do it, debt-free, and have investors participate while maintaining full residential rights to your home. And that enables people freedom. It enables people to be able to live their lives comfortably. And there's a vast amount of money. We estimate well over, just this is debt-free equity, well over $4 trillion in the US alone of debt-free equity of people who are 55 plus, who are approaching retirement, and who want to age in place. That's a staggering amount of wealth locked up in the economy. Free it up, it has a net benefit to the economy as a whole.
Yeah, it's really interesting that you mention it, because you're right. Not only would it, of course, benefit those that are unlocking the value in their home equity and the investors as well, but yeah, I mean, unlocking that much money in value really could have effects on the economy that I don't think are easy to explain. It's a really interesting concept, actually, and I'm surprised that over the last 2 years, I haven't seen more of these concepts pop up. I mean, there's a handful in the crypto that are trying to tokenize real estate in different ways, but it's still a relatively niche idea. And I'm wondering if you have any idea on why.
Well, I think at any point in time where a new technology gets introduced, everyone's trying to figure out what are the use cases, right? Where does this technology fit in? And as typical as you see normally, you end up, everyone runs to the low-hanging fruit, right? And the low-hanging fruit for
it's easier.
A significant period of time were, speculative cryptocurrencies, NFTs, because they were easy to understand for people to invest in and say, hey, from a very rudimentary perspective, I look at Bitcoin and it just keeps going up and up and up. So I'm going to buy Bitcoin and hope it goes up and up and up.
Right.
Without fully analyzing the risks involved. And a lot of people made some money. They jumped on the speculative bandwagon and made a lot of money. A lot of people lost a lot of money. So people tend to gravitate to those sort of easier use cases. Real estate's a lot more involved. There are a lot of aspects to real estate that add complication. Like, is it a security, right? What's your position on that? Are you going to create a security alongside the fact that it's been tokenized, which we do that, right? We are regulatory compliant. Then the next issue is all the back end things you have to deal with: titling, title insurance, home inspection. Those are still things that still need to be done, and I call them the analog world. They still exist in an analog sort of ecosystem where you still need to go and do those things. Right. We need to make sure the title's clean before we do this. We need to make sure the home is inspected. We need to make sure that the owner understands the sort of the details of an equity shared agreement. That equity shared agreement had to be really well structured so that we could work closely with a titling company and a title insurance company, because most titling insurance companies will not insure an equity shared agreement. Most of the equity shared agreements out there from companies like HomeTap are just incredibly inequitable, and they won't get involved in them. In fact, many of the titling insurance companies have sent out memos to their brokers and whatnot to say, don't deal with these equity sharing companies like HomeTap and others. Whereas with us, we got the biggest titling insurance company in the US backing us because they felt what we put together was straightforward, simple, and easy to understand and fair. And no, for lack of a better word, no bullshit in the agreement. Those are all analog things that still need to be done. Even though the asset's tokenized, there's a whole back end to real estate that's quite complex. And it still needs to be ripped out of the early 20th century and being pulled into this modern digital era. I mean, there's still titling offices in the US that require you to send things in by fax.
Right. I mean, who even has a fax machine anymore? So
I don't know who has a fax machine anymore. When I see stuff like that, sometimes I'm like, wow.
Like, how do I even
Some
do
of
this?
them require wet signatures. They actually
Right.
require a signature on the agreements. They need to see it. They won't go digital yet, and
Yeah.
that's still a reality that you have to deal with from real estate. So, and it's also a lot of people don't realize it's the largest asset class in the world, right? It's 3 times the size of the global stock market. It's massive. It's in the hundreds of trillions of dollars globally, with every country having all these different rules and different
I mean, e-
regulations you got to adhere to. So there's a complexity to real estate, and that's probably why it's taken longer. We tackled it, started tackling this 2 years ago, and now we're at a point where we are really comfortable with what we've built as an infrastructure for Western democracies. And
so
yeah,
let's dive into that a little bit because real estate really is very complex. Even here in the United States, just across state lines, there's vastly different rules regarding real estate. So, how does Vesta Equity juggle that complexity, and what jurisdictions is Vesta Equity available in currently?
well, we're available technically in all jurisdictions. Texas is not a market we pursue aggressively for the very reason that its rules and laws are the most archaic. New York's a bit of a pain in the butt too. So those are the two markets that we're not aggressively pursuing for the just very simple reason that I don't think, and I don't quote me on this, I'm not the legal expert in the company, but I think that Texas doesn't recognize equity shared agreements. And essentially, you could have a homeowner that signs off on the equity shared agreement, does the deal with you, and then turns around, sells the house, and walks away with the money from the investors.
With no
So,
recourse.
yeah, and with very little recourse. So
Yeah.
it's not a market we're pursuing. I think that over time, Texas will need to, review its rules regarding those type of elements in place because more and more people are going to want to do it, particularly a retired market that need to access equity without the concern of dabbling into a reverse mortgage, which is probably one of the most inequitable deals a homeowner who's older could enter into at this point in time because of rising interest rates. So, there are markets that have these particularities that we avoid, but it's a big global market, so it's not the end of the world that
Right.
some states are a little more problematic. And if we start getting a surge of demand in Texas and surge of demand in New York State, then we'll start looking at those markets and you know undertake whatever we have to do from an operational legal perspective to start pushing the issue and start making this service available in those particular states.
Right. And you mentioned that, real estate to some degree is still kind of, at least the market in overall is still kind of in the past. It needs to move forward into the future, into this new world that we're currently, trying to create. Invest Equity has a helping hand in trying to create. But what do you envision for the future of the real estate market at large? Like, where should it go from here? What creative new ideas could be created in the real estate market?
Well, I mean, from a titling perspective, that should all be on the blockchain, right? It's a logical move, given the fact that it's immutable and the records are there forever. That's something that needs to be done, but that's a massive undertaking because you got to get local, state, and federal bureaucracies working together, and you got to convince people even at those local titling offices to actually stop using a fax machine. And I know that sounds funny, but you do have like a very old school clerk working in a local titling office that's got to be convinced that this is the future and
Right.
use it. So there are all those elements that need to happen in that regard, and that's a big undertaking. But I think it has to happen. Other technologies are, you've got an asset class that is large, it's physical, it's still in the real world. How do you modernize home inspections, and how do you update inspections? That's when you start getting into like drones, flyby, using AI that can sort of scan the house and determine whether or not sort of the infrastructure, foundation, roofing, those core elements are still being properly maintained or at a certain level in terms of quality. Then there's smart home technology. How do you deploy and tap into smart homes and get an analysis on, how's the wiring, how's the plumbing, how's the
Right.
heating, how's the air conditioning? Things that have major infrastructure costs if they were to fail. So those are areas that I think are going to eventually migrate and become more and more digital. It's the IoT, Internet of Things, that are going to happen over time. And then there's just basic, property management. From a homeowner's perspective, how can they better manage their property? How can they outsource certain elements to third party, like gardening, maintenance, and whatnot? So when something does break, how can they cost effectively reach out to the right vendor and get that fixed, and then have some sort of warranty on it? So there's lots of things that are going to happen. Insurance is another area that needs to still home insurance that needs to be pulled into this new digital era, offering more flexible packages and more flexible terms. And you can't have markets that are going uninsured because the insurance companies don't want to insure them anymore because of past, poor, sort of weather conditions and stuff like that. You can't do that to people, and there's got to be someone who's going to step in with better solutions. So there's lots of areas where I see technology having a net benefit on real estate, but it's going to take time because it is a slow-moving behemoth of an asset class that you've got consumers in the picture, you've got companies in the picture, technology, governments, bureaucracies. So it's got to move, and eventually we'll move in that direction.
Yeah, and I'm curious, where do you think the real estate market is going to move to? Because over the last 2 years since we last, well, I don't want to say last spoke because we had you on over at the Next Block a handful of months ago,
Yeah.
but before we had you on my channel the first time, the real estate market was already relatively out of reach for people in my age group, and it's only seemed to get worse. And of course, the real estate market has cooled off a little bit over the last handful of months, but prices are still outrageous. Interest rates are still higher than they've been basically in my entire life. Of course, not the highest they've been ever, but of course the highest they've been in about 20, 30 years. Where do you see the market going from here? Is it going to come back down? Is it going to cool off? Or is it there's still such a supply crunch that prices are just going to continue to increase because it's a limited resource and there's not enough supply?
Yeah, unfortunately, it's a supply issue, and that's not going to get better in the next foreseeable future. And it's a supply issue from many different perspectives. It's a supply issue from the actual physical materials. There's a sort of a crunch in that area as well, and then it's people to build these homes. That's a significant problem. We don't have enough plumbers, enough carpenters, enough contractors, people who want to work with their hands and build these homes. There's just simply not enough people, and that's not something that's easily changed because you've got to take someone who's entering high school and say, hey, very viable career option is you become a carpenter, become an electrician, become a plumber. You make a lot of money doing that. It's a great career choice, especially when you start seeing technology intermix with these things.
Right.
It's not just a guy with a wrench anymore. When you're a plumber, plumbing's getting quite sophisticated, and it's becoming more an environmental type orientation as well to it. So there's lots of really cool things when you think about it from a career perspective. But you got to convince people at that age now, hey, become a plumber, become an electrician. That's going to take 10 to 15 years to get them through high school, trained as a plumber and electrician, which can take years, carpenter, same thing, and then get them into the workforce. In the meantime, you still have that lack of supply. So that's still going to drive it. It's still a problem that's going to move forward. The other problem is that cities are becoming more and more adamant about expansion, right? Yeah, you can build up, which in my opinion just causes more, concentration in cities, which is not necessarily a good thing for a quality of life perspective. But they're not allowing a lot of expansion and making, permits and building very, very difficult. I can't remember, but I saw it. There was something I saw on YouTube about the number of permits you need to get to build a home in and around San Francisco now. It was just absolutely staggering. And I think the time frame to get it all approved was something like 18 months. So can you imagine if you're building a home and you need to go through almost 18 months of permits and whatnot and applications to get your home built? That's a long time.
Right.
Then you're magnifying it against every home being built.
Mm.
So there are those bureaucratic issues that are there that need to be lifted, and not lifted to the point where we're creating chaos either, and we're just, anyone can go build anything they want.
Right.
But simplify the damn process, make it easier, so people can build homes, so people can live in them and affordably, right?
Right. I mean,
Um,
18 months is such a long time that by the time you get through the permitting process, the cost to build the house could have increased to a level that you can no longer afford to do it anyway. So
yeah.
it's it's not a great process.
And there's a bill now. I don't know where it's going to go. There's a bill now going through the U.S. Congress to stop hedge funds from buying properties and converting them into rentals. Um, is that going to solve the problem? I mean, when you look at the data, these hedge funds are buying. If you look at it from a big picture perspective, they're buying a really relatively small amount of the total properties out there available, and they would require trillions of dollars in order to be able to buy them all and turn them all into rentals. Should they be stopped from buying them? I mean, you start meddling into the free market. I think what we got to do is look for better alternatives, which I feel we are. We're a better alternative from telling people to go out and rent, because our product can be easily applied into the issue of affordability, where you save up some money, you put it down, and then you get investors into the property. And those investors mean that you don't have any debt on the asset anymore, and you're not paying monthly mortgage payments anymore, which frees up your capital on a monthly basis to do other things like build a nest egg, invest in things,
Right.
decide that you want to improve your education, go get a master's degree. It just allows more flexibility to people, and making things more affordable is not saying, hey, don't buy, rent. Or I've seen other schemes out there where people will lend you, lend is a loose term, but they'll give you the money for your deposit, but they're going to turn around and take a massive chunk of the upside of the appreciative value of the home in like
Right.
10 years when you sell. That's not great either. I mean, if you look at what you're actually physically paying them in interest, it's a staggering amount of money. So that's not a great solution either, because it's not equitable. And I think that if a solution is going to be out there to address affordability, it's got to be equitable. And government handouts are not a good solution. Government handing out money so people can make deposits on homes, that's not a good solution either. That's just going to drive inflation, because government's going to print more money or raise taxes or whatever it is they need to do to be able to do that. And it's just a redistribution using the government of wealth. And that never works out well. This has got to be driven by the private sector with really unique, compelling solutions to be able to enable people to buy homes that are affordable and will appreciate in value. Because you don't want to mess around with the economics either, because there's no point in saying, hey, you own a home now. Too bad, it's going to depreciate in value year over year over year, because we're just flooding the market now. So you don't want that either. You want people to be able to make a good investment and buy something that's affordable, that provides them shelter and also provides them a source of future wealth creation.
Yeah, absolutely. Now, what do you think is something, just your opinion, that the government could do to alleviate some of the supply issues? Because, we mentioned that handouts might not be a good idea. Of course, they could maybe relax some of the regulations in some of the states that are overly incumbent or, difficult to build because of these regulations. But what else could the government do to really increase supply in this market? Because I think you're absolutely right. The supply issue, unless directly attacked by government around the world, or even just in the United States or Canada, it's going to be a long game. It's going to be 10, 15 years before we even see the supply issue change with the changes that you were mentioning, if they even take place. I mean, there's no guarantee either that we're going to have that increase in electricians and increase in carpenters over the next 10, 15 years. So what do you think government could do there to alleviate the problem?
Well, government can provide incentives for high school students to start going into those trades.
Right, right.
And
But I was thinking more on the short term, of course. I mean, if that might be
in the
difficult because,
short
as you
term,
said,
I think government
there's
do. Government never works good in short term.
that's true. Although
um,
it doesn't seem like they work good in long term either.
yeah, well, they
So,
need to move fast, right? And we're seeing they can't move fast on anything.
right,
You guys have problems in the U.S. There's problems in Canada. There's problems in Europe. The government's just moving too slowly. They get tied down into these polarized fights about right or left, and instead of saying what's a common sense thing here to do to help the people we represent. They're more concerned about the politics of the
Right.
situation. So I don't know what they could do in the short term. I mean, you need people who are in government that are genuinely interested in doing what they've been voted to do, which is work for the people. I find a lot of government think the people work for them, and that's a problem, right? That's the attitude, and they're not working for the people right now. And most Western democracies, it's not working out well for the people because the governments are not really doing what they're supposed to be doing.
Yeah, I
Um,
mean, we could really talk about this real for a
well,
long time, I feel like, but
yeah,
it's tough because at least in the US, I'm not entirely sure how it works in Canada, at least from an election standpoint, but some of our representatives, they're elected in every 2 years, like the House of Representatives. So it's like as soon as you get in, you're basically already dialing for dollars, as they call it, to get back into office, and you're thinking forward to your next election, because it costs so much to run an election that it seems like they spend half their time in term just looking for ways to generate enough money to run their next campaign, which that's 50% of their time that could be used to actually creating some of these benefits that we were discussing here. But yeah,
yeah,
it's tough. It's tough.
yeah. The U.S. right now seems to be in perpetual election all the time.
Yes, and
And
it's
the
I gotta
media,
say it's I'm over it.
yeah, and the media turn it into like an
A sports
NFL
game. Yeah,
broadcast, and to me that is not doing any good for the people. It's not doing any good for the process. But yeah, in the short term, I think government just needs to stay out of it and
that's fair.
let people solve the problem, and don't create more bureaucracy in the next while. Make it easier for companies to operate, and incentivize. Don't tax as a methodology. And you hear about government saying, "Well, we're going to tax them if they do this." Well, that doesn't solve the problem because the taxes just get passed on to the end consumer, which drives up costs more and drives up inflation. It's not a solution. They just
Right.
need to step out, and provide guidelines. That's it. We don't need you stepping in and creating problems and adding to the noise. The problem will get solved, and we will solve it. And technology will play a role in solving this affordability issue. And it's going to happen. How fast it happens, that's the question.
Right. Yeah, that's the $30 trillion question, I
Yeah.
believe it is currently.
Yeah.
So let's move the conversation a little bit. And when we spoke before the other day, we wanted to discuss a little bit of the evolution of the NFT market and how we talked about it a little bit at the top of the video, where the crypto market was largely fueled by the speculation in crypto asset prices and NFT asset prices. I wanted to contend with you earlier because you said it was easier to understand, and I think that's debatable. I still don't understand NFTs to some degree, at least the craze that popped off over the last 2 or 3 years. But it does seem like the industry, or at least the blockchain industry, is shifting its focus onto real world assets more. I just had on Michael Cotton of Meld Gold, and they're tokenizing gold and silver on the Algorand blockchain. They're going to be bringing other precious metals as well. I had on the CEO of Folks Finance recently, and they added the tokenized gold and silver to their lending platform. So now you can use tokenized gold and silver as collateral on their platform. Of course, you guys over at Vesta Equity are tokenizing home equity. Where does this real world asset craze go? What can be tokenized? What will be tokenized? And I'll leave it at that, and then we can ask more questions.
Well, everything can be tokenized. It's whether or not it poses value to the end user at the end of the day. But I do support all the tokenization of these real world assets, gold, commodities, everything, because it just creates a more fluid and simple. First of all, everything's on chain then, which is great. That becomes an immutable record of the transactions, but it creates the potential for unbridled wealth. Well, not unbridled wealth creation, lots of wealth creation for everyone, as opposed to it being very simply focused within the hands of few. It's enabling everyone to participate in this opportunity. So when you think of it, when you're tokenizing gold, someone could technically go in anywhere in the world if the specific app for this particular product exists, and they could be buying small amounts of gold. They could be someone in Africa, someone in Asia, someone in North America, and being able to access this when normally it would be very difficult to access it, because sometimes you physically have to actually have the gold, right? And own the gold and buy the gold bar. So this to me enables that particular marketplace or that particular commodity to become more accessible to people and more people to participate in wealth creation. So from where I see it going, I see every asset that should be tokenized, that could be tokenized, should be tokenized. Simply because it's an inevitability. We've seen the digitization happen in other marketplaces or other segments, media as an example. Now it's the digitization of real world assets that's going to take place, and blockchain enables that. So I want to see everything that can be tokenized, tokenized. And there's some really great use cases out there. You can even tokenize olive oil production and things like that, because then you know the quality is assured because it was real olive oil that got produced, and that's the real olive oil that's being sold through the system because it was tokenized, it's on the blockchain, it's been verified throughout the whole process. Because there's a lot of fraud also that takes place in food products and whatnot. So it's I'm 100% behind everything getting tokenized that should be tokenized.
Yeah, and it seems, if we want to direct the conversation a little bit towards Algorand, that for all the fair criticisms that exist, I want to say that they are, in my opinion, creating a valiant effort to encourage real world assets to be brought onto the Algorand blockchain. I mean, I mentioned all the real world asset tokenization that I just mentioned, but there's also Agro Token, which has tokenized grains, which is really cool, like soy and all sorts of other grains. There's Fly Bondi that's been tokenizing and turning airline tickets into NFTs that now have created essentially a secondary marketplace for airline tickets in a way that never existed before. The move to real world assets, I think, is what's going to drive the next catalyst for this bull market. Well, I don't want to speculate too largely, but I think the time has come, because I've been in this space since 2017, and really up until maybe a year or two ago, it was all about what blockchain could do and not necessarily about what blockchain was doing. And so it's really, really, really interesting and cool to finally, I feel, be at that precipice where we're reaching that point where we're seeing what blockchain is doing and can do, as opposed to what it might and theoretically do 5-10 years from now.
Yeah, we've put our big boy pants on, and now we're actually doing something substantive in terms of creating real value.
Right.
You and I talked earlier about NFTs. There was so much crap out there, and
There
it
still
just
is.
muddied. Yeah, and there still is, and it just muddied the waters because it gave a misperception to people what blockchain is about. It is a very, very powerful technology when applied into the right segment, can create real value for people. An NFT that's some little squiggly art thing that someone buys and thinks is going to increase in value. Okay, God love you. Go ahead and waste your money on it. It's not worth anything at the end of the day. Now, if it's a piece of artwork like a Monet, Masterworks is a great example where they're buying artwork and tokenizing it. That to me is a great application, right? You're buying something that is a real physical piece of art, and you're a part investor in that art. And then if you can also say, as many people do, they like to have copies of that art, right? A lithograph or something like that they want to hang on their wall. It's Monet's artwork, but it's not an original Monet. But that develops revenue, right? And if that piece of artwork is also developing revenue, then that token could potentially have revenue attached to it. That's super cool. That's a real great use case of tokenization for something that people would think, wow, that could never get tokenized. So
Right.
when you think of an art gallery, that piece of artwork can still sit in the art gallery, but the art gallery's now exited some of the equity, right? So it gives the art gallery, and I mean museum in this case, not necessarily an art gallery, a private art gallery. The museum can then access some of the equity, which they can use to buy more art. And then if they're doing reproductions and stuff like that, they can pass some of that income onto the token holders. So it becomes a great investment for people and a win-win for everyone involved. To me, that's a great use case. And I happen to like a lot what Masterworks is doing. I think it's a great business model in the field of art and blockchain.
Yeah, I couldn't agree more, honestly. That's actually a brilliant idea. And it really just, we talked about diversification at the top of this podcast, and that just goes right back into that idea of a diversified, balanced portfolio, because there is
Yeah.
a lot of art out there that I would like to maybe own a piece of, that I certainly couldn't afford all of it. I couldn't afford, the whole painting of certain artists that I would like to get, but I could afford a fractionalized, 50% or $50 share or tokenized share in all sorts of different artists. I think that's brilliant. Absolutely.
Yeah, and it makes sense. Now it's more speculative, because art's very
Of
subjective,
course.
right?
Yes.
Definitely any masterwork that exists, like a Monet or a Picasso or things like that, are going to retain their value. Where it
True.
starts getting risky is it a new artist that, wow, it looks great now and he's popular now, but his popularity could wane, and then you end up with a piece of something that's not worth anything. But that's part of the process, right? And there's risk benefit to investments, and you have to decide as an individual investor, what is your risk tolerance. And if your risk tolerance is super high, well, you're investing in highly speculative cryptocurrencies, highly speculative stocks, or you're investing in Tesla, where Elon Musk can turn around the next day and screw the shareholders with one tweet, or I'm sorry, one X. I don't know what he wants to say,
Yeah.
tweet or an X. But you run that risk, right?
Right.
Companies are run by people, and people are unpredictable, and they can say things and do things, and the stock could drop dramatically, or the stock could go up dramatically and then drop the next day. So it's something it's more speculative, higher risk, but potential higher return. We're playing in a much more stable, balanced area of where your investment portfolio should be.
Now, I'm curious, what are the demographics of the people that want to use the marketplace that Vesta Equity has to offer? Is it people in their 50s that are trying to unlock the, leftover value, or not leftover, but some of the equity in their home? Is it more broad than that? Is there a specific demography that Vesta Equity is seeing?
So far, the demographic are 40s and up. We haven't had anyone in their 80s or 70s do anything like this yet. Professionals, well educated, university educated, and have good jobs and good incomes, like above average. So they're technologically savvy. They understand how blockchain works. Even though you don't really need to understand how blockchain works with our product, you can onboard your product and not know what blockchain is. But they do know what blockchain is. So we're really dealing with a market that understands how to use technology and tools out there to their advantage, and get the value proposition about accessing equity debt-free or exiting a mortgage. Depends on what their objective is.
Have you had anybody go that route where they use the platform to exit a mortgage?
Yeah, we've got a couple of properties where people want to exit the mortgage. They don't want to be beholden to a bank and have debt anymore. Because
Right.
when you think of it, when you have a mortgage, you're at the mercy of the market because interest rates fluctuate. You are making life decisions based on monthly payments that you have to make, you're contractually obligated to make, which could say, you don't take a job you really want to do that would make you happier, or you can't send your kids to a specific school because you can't afford it. You can't do that side hustle or that side business you want to do because you don't have the cash to do it. It can be very limiting. People make life decisions based on their mortgage payments. Eliminate that out of the equation, and you take all that capital that typically goes to a small number of banks when you think about it, makes those banks and their shareholders super wealthy, but impoverishes everyone else, which are the vast majority of people out there. If those people don't have to worry anymore about making those monthly payments and are debt free, that's a staggering difference in terms of how you approach your life and what you do with your life. Debt has become sort of the weight around everyone's necks, and it's dragging us down because the amount of debt from federal, state, local governments is staggering. And you start taking the debt of individuals from house debt to car debt to credit card debt. We're building an economy on a house of cards, and debt is that are the cards. So you're going to pull one of those things out, the house of cards is going to collapse. And I think we need to move forward and start thinking, what are better ways to build the economy over the long term? And debt will play a role in it, but it can't play the only role. And right now, it plays the most significant role in terms of driving growth because people borrow. And I don't know if you've seen the news lately, but Christmas sales are doing gangbusters, but apparently most people are doing it on debt, which is not great because the piper is going to come asking for the money,
Right.
and you're going to have to pay them.
I mean, I think it was just a couple months ago that it was announced that the U.S. credit card, the amount of debt that people have on their credit cards just amassed $1 trillion, I believe, which is a staggering amount just to think on credit cards when you consider, at least currently, those interest rates are like 20 to 30%. It's outrageous. It's almost usurious interest rate fees.
Yeah, they are. And we talked about what the government can do. The government needs to rein in these credit card charges because they're getting to be absurd. If interest rates are 5, 6, 7%, credit card interest rates shouldn't be triple that. That makes no sense, right? That's an area where government should be taking action and saying to these banks, look, you got to make money, but you can't be royally screwing people, and you're simply causing long-term problems with regard to these charges because they're unattainable.
Absolutely.
And then the banks can turn around and say, well, people's free will, they do what they want and stuff like that. And I agree that to a certain extent, but at the same time, there's a reason why we have and elect governments to look in and say, okay, this is not reasonable. Because if you let people run amok, they'll run amok, and they'll charge whatever they want to charge, and they suck people into these low interest credit cards, and then before people know it or realize it, they're paying 30%.
Right. They're like, oh, it's 0% for the first 18 months, and then it's your guess what it's going to be after that.
Exactly. So, credit card debt, other types of debt, they're just simply becoming a burden on society, and we've got to start figuring out ways. And you can't just turn around and change overnight. But we've got to figure out ways where growth is not just driven from debt; it's driven from other means as well. And right now, if you look at it, institutions do tie up a lot of capital because people's options are limited. So if I own a home right now, I have two options. I go to the bank, go back into debt, or I sell my home.
Right.
Not necessarily the greatest choices there. So we should be creating other ways to access your equity in your home. Some people may still take the debt route, and some people may still want to sell. But there should be other options there for people to access the equity in their home without having to go into debt again.
Yeah, I couldn't agree more. And there will be people, even as these trends tend to kick up a little bit, there will still be people that go and use the traditional methods of mortgages or HELOCs or whatever. But I agree, the more options, the better. And the more options actually allows people to get creative because there are people that are looking at it, they're like, oh, I've never really thought about doing it differently than the traditional way. How else could we do it? So I could see in 5-10 years having even more interesting options available on the market as we move into this digital world. But I'm curious, you mentioned a little while ago for 2024, the plan to bring income generating vacation properties onto the Vesta Equity marketplace. Are there any other cool plans that Vesta Equity has that they want to deliver over the next couple of years?
Oh, we've got lots of cool plans.
Can we hear some of them, or are some of them still?
Well, we want to get into synthetics.
Okay.
So, create opportunities based on real estate values in specific marketplaces where people, it's a little more speculative, but stuff like that. And we have other plans that I'd love to talk to you about, and I will let you know before I let other people know, but I can't just talk about them yet.
Fair enough.
My founders and my partners and investors would take me out and shoot me.
We're always trying to get a little bit of alpha on this show. I had the CEO of Folks Finance reveal something that wasn't totally public yet, so I felt like I had to squeeze you a little bit to see what I could get out of you. But I totally understand.
Benedito gets excited about things.
He does. He's a great guy. He's a great guy.
He's a nice guy. He gets very excited and he's very passionate about what he's doing. So I love that, and I love that.
That's the way to be, though. I mean, if you're not passionate about what you're doing, I mean, why do it?
Yeah, no, exactly. Well, there's lots of people that do stuff they're not passionate about and they're stuck in it.
I mean, I know I say that it's easier said than done. I mean, the big answer to why do it is, well, it's what's paying my bills right now. So I mean, that's how can you argue with that?
Yeah, exactly.
This has been a fantastic conversation. I'm going to have you back on once we get a little bit closer to unveiling some of the cool ideas that you didn't want to share with us today, but we definitely want to hear more about them. Michael, is there anything else you want to share with our audience today? I think this has been a great discussion on both Vesta and the state of the market at large, but is there anything else you want to share with my audience today?
No, nothing that I need to say in conclusion. I think we covered a lot of ground here. I'm always very open with people about, being very cognizant when they invest in something, make sure that it's, regulatory compliant, that do your homework. There's no assurance better than the homework you can do before you invest in something. Because you can end up following, the crowd and end up losing big time.
Right.
Do your homework, and then hold on to things. Don't panic when something goes down. Hold on to it. And this is where I sort of take it a page out of Warren Buffett's book. You're in for the long term. Stay in it. Don't panic because it drops in price. You've only lost the money when you sell it. And now, having said that, if all hell's breaking loose and the company's going to hell, sometimes you are better off selling it. But do your homework. If you invest in good companies, invest in good technology, and invest in good products, you will win in the end. You just have to be patient. Speculation's never great, and I'm not a big day trader fan because I think it's just really driving a sentiment in the market that money's easy to make, and most people can't make money that easily. If it was that easy, we'd all be multi-billionaires. Yeah. And these guys create this sense of, I'm such a brilliant genius. I'm making $1 million a week on being speculative in the stock market, day trading. Yeah. Okay. Whatever. It's not that easy. And
what they don't tell you is that I believe the stats like 90+% of day traders lose money. So it's
exactly.
Day traders, there aren't many of them already, and it's a small percentage of them that are actually making all of the gains that entice all the other people to give it a try.
Exactly. And there's all these gurus in real estate too that, I'm going to give you my trade secrets, and then people end up spending money to find out what the trade secrets are. It's a bit like a Donald Trump thing, which is Donald Trump University. If their trade secrets are so damn good, why are they selling them to people and giving them to people? Right. They won't be any good anymore if everyone knows them. So be wary of stuff like that. Just do your homework. If you want to invest in real estate, find out the best steps, find out the best platforms, do your homework. And hell, if it's a small company, call up the CEO of the company and speak to them.
Absolutely. Well, Michael, like I said, this has been a fantastic discussion. For all my listeners, if you want to learn more about Vesta Equity, check out the video description down below. I'll leave a link to the website there. I'll also leave a link to the podcast that Vesta Equity has on YouTube. Definitely check that out. And Michael, I hope we have you on the show again sometime soon.
Definitely. Always willing to talk to you, JT. It's always a pleasure.
All right, you just watched my conversation with Michael Carpentier, the CEO of Vesta Equity. If you enjoyed this conversation, smash that thumbs up button and subscribe to the channel. And then let me know down in the comments below what your favorite part of this conversation was. In my opinion, it was a thrilling discussion, and I personally believe that real-world asset adoption on-chain is what's going to drive the next crypto revolution in a way that has not been yet seen before. I'm really excited about this wave of real-world asset adoption, but I want to know your thoughts, so let me know down in the comments below, and then check out the video description to learn more about Vesta Equity as well as their Vesta Equity podcast over on YouTube. Definitely check those out. Share this video with a friend, like and subscribe, ping that notification bell, and we will catch you in the next episode. Thanks.
Ladies and gentlemen.